Good afternoon. This is the video newsletter for Buy Sell Short for Sunday, November 21st. Back from a very nice, relaxing vacation, and market did almost what we wanted to happen while I was away. We got a nice little sell off. Fortunately, we got the bounce a little bit earlier than we had hoped for, but we can't have everything work out the way we want. Reason for the market sell off, as I mentioned, we had a lot of hot air in that market, and plays were few and far between, and we were hoping for a little retrace just to take some of the air out so that we could see some plays retrace. But we had options expiration last week. No surprise, we had a sell off into that. And then the big reason that we had a sell off, let's take a look at the US dollar chart. Since the Fed came out with their QE2, the dollar has gone on a 5% move, sort of similar to what we saw in August before this recent sell off in the dollar began. The whole reason, and it is no coincidence at all, right when the Fed QE2 starts, we have debt worries in Europe rear their head out of the blue, and that is enough to sell off the euro, rally the dollar, and cause pressure on stocks. This Irish issue, just more fabrication. There's a crisis over there. Let's not, pussyfoot around that. But, the rumor mongering and pressure, essentially what happened is just like they did in the US a couple of years ago, the powers that be, the shorts and the bond players, caused a run on Irish banks, and they need some financing. And, the Irish did not need the money, but the shorts want them to have it. They forced them to have it. And right now they're at the table, at the bargaining table. We had that big pop earlier on Thursday, and the reason for that was, the Irish are finally sitting down with the EU and the IMF and negotiating a bailout plan. Now, what a lot of traders don't realize is the Irish have been very reluctant to deal with the EU. A, they don't need the money, and B, the big pushers of that financing are Germany and France. And the reason they want to do that is tax rates are very, very high in Germany and France. The reason the Irish economy did so well over the last 15 years was they're a highly educated English speaking workforce with a corporate tax rate of 12.5%. Very, very attractive to U.S. companies, and that's the reason why there's 1,000+ U.S. companies based in Ireland. They go in there, they build their product on the cheap in Ireland, and they ship it to mainland Europe. Very annoying to the Germans and the French, who have corporate tax rates of 28 to 30%. And part of the reluctance on the Irish coming to a debt deal was that Germany and France are going to put little caveats to that financing that the Irish have to raise their corporate tax rate. And there you go. There's a 3-minute summary of what happened in the global currency markets and why that has influenced us. Big talks over the weekend. Very likely a deal will get announced last week. If I'd actually been around during last week, I would have told you that that was the perfect scenario for this market sell off, because the Irish excuse for the market drop, absolute bull crap. Just like, we've had all these other crises over the last few months. In a few days, couple of weeks, you won't hear another word about it. It will go to the sideline and be totally forgotten until they need another excuse to take down the euro and rally the dollar. And that's just how manipulation works these days on, a higher level. Anyways, we got our sell off in the market, and looking at the dollar chart here, if we're looking back to what happened in August when we had that head and shoulder breakdown, we had about a 5% rally in the US dollar, and then the dollar went splat and the market went vertical. We've had about a 5% rally in the dollar right now, and if we scroll down a little bit, you can see the dollar is overbought. We're going to have that Irish issue put to rest hopefully in the next couple of days, and that'll be our excuse for a possible, little Santa rally. Typically, the week going into Thanksgiving is bullish, and given the pop we had last week, odds support that happening again. Looking at the Dow 15-minute chart, here you can see my nice little vacation on the market do exactly what we wanted. Nice little sell-off. Then we had that hope that a deal with the Irish is going to be made. We're right at that downtrend line. We actually closed right above it on that little pop late on Friday. But check out what we're having right here. we have a golden cross on the Dow 15-minute chart. It's been quite a while since we had one of those. I believe it's been, maybe 2 months since we had a golden cross on the Dow 15-minute chart. And you recall, very, very accurate barometer for the market, at least in the near term. Average gain on a golden cross on the Dow 15-minute chart is about 150 points. So if we're tagging off that, we'd be looking for a bounce back to about, the 11,300 to 350 area. Looking at the 15-minute chart, all the indicators are supportive of at least a gap up tomorrow morning. Again, this is all going to depend on how the overseas markets react, i.e. the dollar/euro/Irish issue. So, charts can say one thing, news trumps charts every single time. But looking at things the way they are right now, we're at least looking at an upside pop tomorrow. Dow daily chart. This sell-off that we had over the last few days, almost a 500 point pop. We held the 50-day moving average over the last 3 days, which was very, very bullish. And if I threw up a Fibonacci retracement chart using the low back in August and the recent high, guess what this level also marks? 38% Fibonacci retracement. And you'll recall that in bullish markets and in bullish stock setups, whenever you have an extended run and you have a retrace, in bullish markets and bullish indices setups, the 38% Fibonacci retracement level, which is where we bounced off on Thursday, is where you see strong markets and strong stocks bounce. And we had that bounce. Again, we'll probably need a breakout over that downtrend line around, 10,225 would make me feel comfortable. But we've got RSI breaking up through the 50 level, and we've got stochastics down, bouncing off 20. So, we've got a lot of positive chart indicators out there. And then our favorite indicator, our favorite ETF, SMH, this acted really, really strong. Just looking at this chart over the last week during this market sell-off, SMH was able to hold that 20-day exponential. We held the uptrend line from the August lows, and next buy on the SMH would be a break through 31.31 is where we'd look to buy. Volume was on the light side, which is sort of a concern, but that's been more the case this year. It's been sort of volume has been very, very choppy on the SMH, but the chart looks very, very good, and we've got stochastics bouncing off the 50 level. So we have SMH support for a market pop this week. Now, I know I spent quite a bit of time going over the indices this week, but I've been away for a week. We need it. We're not going to be jumping into a whole lot of plays this week. And one other comment on the indice charts: SMH, Russell 2000, S&P 500, Dow Jones. All of these charts have golden crosses on the daily chart, and you very, very rarely see markets break down after a golden cross on the daily chart. Typically, they are very, very bullish, at least for the next several months, 6 to 9 months. And don't forget all those little indicators that I posted a couple of weeks ago regarding the midterm elections working out exactly like we wanted, and the average gain off that scenario was 8%. We also have, next year turning into year 3 of a presidential cycle, which is very, very bullish. I believe it's 18% is the average gain in year 3 of a presidential cycle, and it actually ticks up to over 20% when that president is a first-termer like Obama is. So we've got a lot of positive catalysts out there. And one more little caveat. Every time this year when we've had these BS debt issue crises miraculously appear out of nowhere in Europe, after it's been resolved, which they always are, by the way, because the excuse for them is, pretty bogus if you ask me, we have a fat little rally afterwards. So, we've got a lot of things lined up positively for us going into this week. Anyway, let's jump into some stock plays. NEI, there's no way to put this, but major disappointment after its great earnings report. Was looking at this chart, but it was able to hold that 140 support level during that sell-off last week, which is very bullish. And the action in NEI reminded me of another stock that we were sort of frustrated with early on this year that ended up being a huge monster winner. And the movement that we saw in the stock, we eventually started saying, hey, this is actually really good. EGHT was that chart. Remember when we first got into this one a few months ago? It would go up to 160, 150, all the way back to 120, then up, then back, and we were going, damn it, when is this stock ever going to break out? And then the last few moves, we were like, hey, this is fantastic. You know, we're getting a 20% pop once a month at least on this stock. We get to hold a core position, we get to have scalp position, and we just wait for that breakout to occur. Same thing on NEI. Look at this stock. Once a month, we get at least a 20 to 30 cent gain on it. On a $1.40 stock, that's about a 20% gain once a month as we wait for a breakout that will eventually occur on this stock, in my opinion. Stock is pretty beaten down right now. We've got stochastics right down here where it usually bounces. On the last couple of times we've gotten down here, especially at the 140 level, we've based for about 3 or 4 days, and then we've gone boom. You know, we've based for about 3 or 4 days, we went boom. So looking for similar action here. The next break over $1.50 should set this one free. BGP, just throwing this one up because we're getting into the holiday seasons. You know, they've got their e-reader book. Stock's been pretty much beaten to death over the last, we're just sticking it on the watch list right now. We've got no active trades. Would probably get interested in this one if it's able to get back above the 20-day exponential at 118. DLIA, this was our breakout play. Bad timing. I was going away. We had the market breaking down, but the chart still looks pretty solid. Would not be adding this one back after stops triggered unless it's able to break 193. Safer entry might be a break at 2, but 193 with stops at $1.88 might be the better play. So keep an eye on this one. The stock still looks very good, and the $2 breakout plays have been doing very, very well even in this bad market, and there's fewer and fewer of these plays left. IKI and Icanos, stock we played many times over the last year. They did some financing last week, and that is why the stock went splat. They sold 11 million shares almost at $1.05. Stock's been consolidating over the last 3 days. Interesting part about that financing, however, is one of their large hedge fund holders that own 45% of ICANN bought half of that financing, $5 million worth of stock. They now own 48% of ICANN. Definitely something to keep an eye on, and as the chart works here. So this one's on the radar. Sort of in an iffy area here. Aggressive traders probably could get in here with a 98-cent stop, but ideally the best entry would be an add on a break of $1.10. But again, another one to throw on the watch list here. We've got all our indicators in nicely oversold territory, so back on the watch for IKN going into this week. CBRX, this is another one we want to keep a very close eye on. They've got data on their drug trial, their preterm drug coming out sometime in December, so you're going to start to see the hype come in here. This is also a breakout chart watch. Ideally, the best entry would be an add on a 140 break, maybe even 145. If it breaks that level, it's off to the races. If you do add in the 120s, stop would be at that 50-day moving average, and would add this one really, really small, waiting for the breakout. It can be a frustrating stock, but just looking at the chart, it looks like buyers are starting to move into this one ahead of the data this upcoming month, so definitely one to push up on that watch list. Another one to keep on watch tomorrow, IMOS Chipmosis. This would be a watch for break of $1.50 with targets of 165. So stick this one on the radar again for tomorrow. Another one we're going to be keeping an eye on here tomorrow is RAME, RAM Energy. Nice little breakout potential here. $1.80 could light this one up. If you're jumping into this one, you'll probably have to keep your stops at the 200-day moving average, 171. Target would be a move to 2+ here on RAME. And last but not least, short stock to keep an eye on, APRI, old symbol NEXM. Got a fat little pop earlier this past week. Let me look at that chart here on a closer time frame. Canadian approval for their drug, stock sold off, and then we had a Seeking Alpha pump, which has been pretty common lately. Would be watching this one to see if the nut jobs take it on one of these crazy moves. They don't have a whole lot of cash left. Ideally, we'd like to really see them jam the stock up. $3.50 to $4 area would make for a very nice short on this stock. Remember, this is a stock that consummately disappoints, so we want these suckers to push this one as high as possible. So this one is on watch for a short alert. Running out of time here, so I'm probably going to have to do another video. And, going into tomorrow, we've got a lot of watch lists, and I will see you guys in the chat room tomorrow. Good night.